Hey, good morning, Team TFP. It is, let's see, Monday morning, the 17th of November, calling into the end of the year. So, you will see that I have my screen here. I'm introducing a new, it's just a moving average. There's nothing special about it. It's a 14 period moving average on the 24 tick chart, and we're going to call it the Sidewinder. So, the question is, why am I doing that? Why are we introducing it? So, what we need as we're trying to solve challenges with the algo, good challenges, but challenges nonetheless, right? As we're trying to solve them, what we are trying to figure out is, well, what's the early warning system or the early alert system that the market's going to flip one way or the other? And one of the areas that, one of the problems is often by the time you get the cross of the 100 past the 200 and you see it, the move has already occurred. Okay, so the problem we are specifically trying to solve, the problem that we are specifically trying to solve is how do we get the early alert so that we know that we're about to get this move here, right? And then how do we use it from there? So we're going to start off with a very basic, simple principle. Okay, so if you go back to um, if you go back to Friday morning, for example, the first alert that we might move higher occurred here right at 8:30, right? And if you look at what happened, right here, so I'm going to circle it, right? Let me erase my lines. I want to erase all lines, so let's do this. Right click, erase drawing. There we go. So if you look, th- right when the Sidewinder, the 14 period moving average, I'm just going to call it the Sidewinder. Okay, right when it crosses, what you will notice, right? So the most conservative first, the algo on the turn, right, lifts very, very nicely to the upside. So sometimes you'll see that's the algo, that's the alert, and that's the bottom right there. If you wait for the 100 to cross through the 200, in this case it served our purposes because of 830 and it rolled down, right? But then you'll see we crossed underneath here, right? And so there's two things about this. There's a double-edged sword, right? So we recognized that we were inside support on Friday morning. So one of the things that could have happened is you could have said, hey, it's crossed through, and that's my algo on the turn. Okay, so there's your stop. No problem. I have no issue with that. But this is where I'm most interested, right here, where the 100, where it's crossed over the 100 and the 200. You'll notice that it's not clear that the 100 is crossed over the 200 till right here, and that's fine. Um, it really wouldn't have made much of a difference Friday morning, but oftentimes this is the first chance you have at setting up that trade to the long side. And anyways, that's the idea of how that would have, that's the idea of how that might have worked, right? So if you go to this evening, right, you'll see here, even though you didn't get any algos down to the downside on the 24 tick, it served two purposes. Obviously, when you get underneath here, the potential roll to the downside, you get an early heads up. If you wait till the 100 crosses the 200, you're all the way over here. So had either of these bars been algos, or if you take the engulfing bar, either way to the downside, you got early trades, and it sets you up for maximum momentum to the downside. What do I mean by that? So let's go back to a place where none of us are familiar with because it's been a minute. Let's go over here, right? So again, here is a good example, right? This is a place where if you wait till the 100 crosses the 200, you're really pretty late to the trade, right? You'll see once this gets underneath both the 100 and the 200, white bar down, immediate beautiful trade, white bar down, beautiful trade to the downside. There's really no solid trade here one way or the other. And then as you look when it crosses up over here, again, we're over both moving averages, green bar to the upside, white bar stuff to the upside, and it puts you on this immediate hinge, which is the problem I'm trying to solve, of getting the momentum to break to the upside pretty early. So, and if you look earlier in the day, I'm pretty sure it worked. Okay, so here's 943. You can see this is the break underneath. So now you're going to hunt for your algos. This is your first white bar down. I don't think I'm lying about that. This is your engulfing bar down. This is an engulfing bar down. And you can see you just have maximum momentum right when that occurs. You can see it never gets above, so you can continue taking your algo. This is a stop. This is a scale and a stop, and then that's your payday right over there. And then you'll see as you come through here, right, I'm looking for the cross through both the 100 and the 200. Until that happens, I maintain bias on one side or the other. So then if you go through this chart, this is where I'm looking for the longs, and you can see that that's exactly what happened. So it's a great example. That's 1017. It was a Friday, and I think it'll be a good and powerful value added. You really want to be in there in the early stages of that roll down to get the break to the downside. So that's my 2 cents. I really couldn't find a place where this was any kind of disaster. I went and looked, but generally speaking, once you get this above both the 100 and the 200, orange bar up, like those early green bars up, they give you the acceleration to the downside, and then the contra, right, underneath, white bar to the downside, green bar to the downside. And until it's below, I stay with, until it's above both of them. This is where I'd want to be looking for the longs, and that engulfing bar would have been your early entry in for the long, or the green bar up right over there on the turn. Either way, you were able to collect a payment for the efforts. And then here it's underneath, right? So I'm back to looking for shorts when we're in this condition. Obviously with anything we can take, it can get whippy sometimes. So you want to have your general reference points on the chart anyways, like what's my long, what's my short, et cetera, and what am I looking for to get paid. But this, for me, is a big deal right there. When you get that, because it's putting us right on the edge of that fast acceleration. Now, I would have said the same thing over here. I would have pushed and gotten stopped on that trade, right? Because I'm looking for this right here and that fast acceleration to the downside. And then over here, I'm looking for the long, right? So I can tell you, I might have taken this, and I would have taken this as well. You can see the first one I wouldn't have gotten paid, but I surely would have on the second one. So it's really telling us where that momentum is flipping and where traders are most offsides. So that's my 2 cents. In combination with the algos, I think it's going to be a great add. And yeah, that's what I got. So I will see everyone in a little while. Talk to you later. Let's have a great day.